Hi, my name's Danny Fleming.
We never know what order to do that in. And
I should always go first. I should always go first.
And I'm Marcus Collins from MA Properties. And we are going to talk about this evening the 2020 Local Market Review. And we'll get our crystal ball out and talk about 2021, even though it's only February the 10th.
And we should clarify, we do sellers masterclasses every month. And for the past 5, 6, 7 years, we've always done the local market review in the beginning of the masterclass. We decided to pull them apart because of the fact that even though we're going to cover Lexington and Arlington in-depth market tonight, it's not necessarily any other town, and we didn't want people to think, well, our sellers masterclass is only for Arlington or it's only for Lexington. So we pulled it out. We are going to be covering other towns as well, and we want to show you how you can get that information. But let's get going. So why do we do these? Well, it's really important because smart moves are made here. It's easy to get information and data today, and it's much harder to make sense of it and use it to your advantage. And this is why we take the time to explain, and why we're serious about learning every data point in detail, and we study our markets, our markets so obsessively.
As you'll see in a minute. So what is the agenda for tonight? First off, before we even start getting into Lexington and Arlington, we're going to show you where you can find this information that we're about to show you. Where can you go? Because it's publicly accessible on our website. So if you're talking about Waltham, or you're talking about Acton, or you're talking about 50 odd towns in the area, we're going to show you where you can find it. So after that, we're going to get into Lexington. We're going to cover single family homes and the luxury market. We're then going to get into Arlington, single family homes and condominiums, and then we'll get into the 2021 predictions. So let's get going. Where can you find this information? Marcus is just getting us onto, awesome, this is our website, as you can see. And I'm just trying to find the mouse. Where is the mouse? There it is. We have 3 screens here, so you have to excuse us because we go, which screens are on?
So this is our website, mapropertiesonline.com or maproperties.com. Either will get you there. First off, I'm going to show you the towns that we have information for, and then I'll show you how you can get the info. So you go to the Communities tab, and then we're going to go to Other Towns, and the community information. Here, this is going to show you every town around the area that we have data for. So as you can see, we've pretty well got data for everywhere. Although look at Port Tewkesbury and Wilmington, we really need to start pulling
when
data
Jane
for
tells
them.
me about that all the time. And then Andrew asked me for North Andover the other day.
Okay, well,
Like, okay.
So stay tuned.
I usually add 4 or 5 towns a year, I should say, and I added a few last year, so I'll add those too. Not sure about North Andover.
So if you're interested in those towns, they'll be here soon. So let's go back, and that was just really showing you what towns we've got this information for. So we're going to go to real estate statistics. Now, I want to show you just a couple of things here. I'm not going to dive in deep here, but you can see that inventory levels, you'll start seeing graphs that look like this in what we're going to go through with the rest of this local area market review. You've got absorption, you've got sales price distributions, you've got price per square foot bands, sold to list price ratios, yearly total sales, and this is for all of those 50 towns, average home prices, average home price trends, median home prices, town market activity, price to volume comparison, town analysis, past sales, new construction, and current inventory. Now, I want to just go, I'd love to show you past sales, but no, past sales, you can say whether you want single families or condos for whatever town
you can specify a price range, you can specify how long you go back, and then it'll pull up all of the homes that have sold with those parameters in that town for that period of time. It'll show you them on a map. But even better than that is if you scroll down, you'll see the raw data. You'll see the list price, you'll see the sale price, you'll see the days on the market, you'll see the size, etc., a whole lot of data. And that will give you a really good initial view of what the town's dynamics are. Because if you're seeing a whole lot of homes on that past sales where the list price is less than the sold price, there's a lot of competition. If you're seeing in that price range that there's not many that are selling over the list price, well, at that price range, maybe it's not. But, so that's just you should go, I'm always in past sales. It's really useful. I want to show you town analysis, because what town analysis does is it pulls together a whole lot of different data for one town. You can go in and see the individual graphs for the town and compare it to other towns if you were wanting to say average home prices. But here it pulls up all of the information for a town. So let's say we want to look at Carlisle, and we're going to select a property type. We're going to do single families, and we hit submit. Then what it's doing is it's going off and pulling a whole lot of information together. And here what you can see is when you compare January 2021 to January 2020, well, the average days on the market for the last month was a lot less than it was the year before. Because remember, the year before was pre-COVID. Now we're in COVID, and we'll get into why that means that so much. Here you've seen that the average sale price was different. It might just, look, you're only talking about 4 homes versus 5 homes. This is really not enough data to really mean anything. Yeah. And you're sold to ask price ratio. Again, not enough data to really mean anything. But when you look at this, it talks about the profile of single family homes. You've got the average property size of 3847 square feet, so it's a big homes. You've got the average sale price being $1,056,000. The average property age is 48. Price per square foot is 287. Your school ranking is 2. And what's the commute like to head into Boston? Even though these days we don't need to worry about that so much, but it will come back. So if you're coming from out of town, this is giving you a good synopsis of the information. And now what you're doing is you're seeing this is the inventory levels of Carlisle. And we'll go into what these mean as we get deeper in here. But I'm just showing you can get this information here. Your median sale price, what's happening there. Your average sale price. What happened to the the sold to list price ratio for the last 13 months. And how many homes were selling in those time periods. And this is the average sale price to list price ratio, this red bar. What was the price distribution in the town? And what's the absorption rate? What are the total yearly sales? All of this information. Now here, this is the town market activity. You can start seeing when homes are listed. If you wanted to pull out and just look at when homes come on the market in Carlisle, rather than look at this graph with lots and lots of colors, you can actually go to the market activity and just specifically say, I want to just look at listed, when do homes come on. So that's just a bit of an idea of where you can go to get more information about the towns that we're not covering tonight. So let's switch over. Marcus is our techie.
We've got buttons in front of me. It's not really that techie, trust me. It's not that technical, but I need to know what's next. Okay, so shall we go and talk about Lexington?
Yeah.
First of all. So, what we should say is, delivered to the mail USPS today. Market review.
So if you live in Lexington
Yep.
or Arlington, they should be in your mailboxes in the next couple of days.
Hopefully, next few days. In this, we're going to give you a synopsis of what we actually is within this. There's more information within the market.
Show it up.
Go on, you can do that.
Yeah.
Within the market review. Not only do we provide all the graphs, that's all the people in the team.
I know,
You can see
I'm
that.
just going there.
Not only do we provide the information I'm going to show you here in terms of the graph, there's also some analysis of it. We cover in Lexington, we cover single families, we look at luxury, we look at new construction, and this year we look at condominiums too. So we cover the full range of home types and so on within the Lexington market, Lexington market. So, single family homes, let's kind of jump in, and Danny showed you a couple of graphs. You'll see a few of those, but you'll also see a few more as well. Different ones, because we put some different ones, a few different ones in market review. All right, so inventory levels. What inventory level is how many homes are available to buy on the first of the month. And we've been tracking this for a long time now. We have data that goes back to almost 2000. So we're looking at big trends within this. The absolute numbers don't really matter. What matters is the trend. And as you can see from this graph, there was a big drop in inventory levels in 2013. What happened in 2013, if you think back to 2007 and 8, the real estate crash, buyers were just not confident enough to come back into the market. And so we had very high inventory levels all the way through from the crash until 2012. And it was almost like a light bulb went on in 2013. We see it here in Lexington. You see it in other towns as well. Arlington, interestingly, was about 12 months earlier. But there was the buyer confidence came back, and it was literally like it wasn't there, then it was there. And you can see that in the data. Those low inventory levels continued. Something going on there in that 2017, 2018. There's more about that in a moment. But then as we get into 2019, you can see inventory levels rose again. And if you think back to end of 2018 into 2019, there was a lot of discussion around, are we going to have an economic downturn? Is there going to be a housing correction? And what that meant was that we saw more sellers coming on the market, but buyers were a little bit reluctant to buy. Sellers thinking, I want to put my home on the market before the crash happens. Buyers thinking, maybe I'll wait a little bit, perhaps prices will be cheaper when the crash happens. Reality is no crash happened, but that's why you see more supply, less demand, and therefore inventory levels rose. And that's what you can see in 2019. 2020 is a story all of itself, and we'll talk more about that in a moment. But you can get that kind of the big picture view from this inventory level graph. When buyer confidence returned after the crash, and then in most towns you can see in late 2019, that perception of a crash which caused that kind of disturbance to the market.
And we should point out that 2013, the reduced numbers in 2013, it's actually not a lack of supply. It is, as Marcus was saying, increased buyer demand, because in the next graph you'll see, we actually sold more homes in 2013 than we did in 2012. So it wasn't a lack of supply. I think that's sort of key. Mm-hmm. It's just that more buyers were buying.
Yep,
because
absolutely.
If you think about it, no, that's well, if you think about it.
I have no idea what Danny's going to say right now, so anyway.
If you think about it, what that graph is not showing you with the inventory levels, the inventory levels on the beginning of the month and then the beginning of the next month, they're not showing you that a home comes on the market the following Thursday, goes under agreement by Tuesday. Following Thursday, goes on the market, goes under agreement on the Tuesday. So we're actually selling a lot of homes in between those two data points that are showing, even though it looks as though it's lower. Was that? Yeah. No.
Well, no. Well, no. You're right.
You've actually not heard that explanation.
No, I have.
Before,
I have heard that before. But the trick with this graph is to look at the trends within this graph.
Yes.
Not to look at so it's really is one.
I know, but what I'm trying to sort of say is the reduced levels, even though we're selling more, people think that it's a lack of supply, whereas it's actually not.
Right. Yep. It's an increase in supply.
We're married. We're allowed to disagree.
You're right, dear. I knew this was going to be hard.
Keep going.
All right, so home sales. Relatively static home sales until 2015, but something happened in that 16 through to 2019. This is home sales, not home listings. But if you look at the number of listings too, you see that reduction in the number of listings. Now, what happened then in 16, 17 and 18 was that sellers within Lexington were somewhat reluctant to bring their home on the market for a couple of reasons. First of all, the difficulty of buying their next home, because most sellers in Lexington, when they sell, they're looking to downsize, and then they end up in a competitive environment competing with first-time home buyers, of which there are a lot. So very competitive buying market in general, and so difficult to buy. And if you can't buy, then clearly you can't sell. And so we also saw many Lexington residents deciding to stay in the town because there was lots of price appreciation. Therefore, they thought, you know what? Yes, I have to pay taxes, but I'm going to stay where I am. I'm going to ride the price appreciation wave, if you like. And that's what you see in that 16, 17, 18. Now, 2019, there are a lot more homes came on the market, but they didn't sell. And so you can see we have relatively static sales in 2018 versus 2019. Even though more homes were listed in 2019, they just didn't sell. Now, what happened in 2020? That's what everybody wants to know. What happened? And so there's a couple of things here. First of all, there is a lot of pent-up supply, if you like. There are sellers in Lexington who, given the right motivation, would like to sell. And COVID gave that motivation. And so we saw a lot more homes coming on the market in 2020. On the other side, on the buy side, on the demand side, we saw a lot more buyers in the market. Buyers thinking, I want to move up a little bit further out. As you mentioned before, the commute to Boston isn't that important to me, even though Lexington has a good commute to Boston. Therefore, Lexington became very more desirable for more buyers. It's always been desirable, of course, but desirable for more buyers. And so we had a lot more buyers coming into the market. So here we have this kind of perfect storm, more sellers and more buyers, and therefore you see the number of home sales rise. That's almost unique to Lexington, because we saw the reduction in the number of homes that's listed and therefore sold since 2015. If you look at Winchester is a very similar town in terms of its average sale price, for example. It didn't see that reduction in the number of sales. Therefore, it didn't see that increase in the number of sales in
Dramatic
2020.
Increase, yeah.
So it was a relatively static picture. And if you go back to the graphs that Danny showed you before, and you dig into home sales for Winchester, for example, you can see that it's relatively static. Yeah. So that's what's going on there. So Lexington found itself in this ideal situation where there were sellers who were ready to sell, but there was an increased number of buyers who were ready to buy, and that's why you see the number of home sales spike about 25% higher in 2020 versus what we saw in 2019. So that's what's going on there. Let's say somewhat unique to the town. With lots of buyers in the market, but a lot more supply. Days on the market was roughly static to what we saw in 2019. So no big change in that one. And actually, if you look at the sale price to list price ratio, it was about the same. It's about a percent difference. Not the numbers we saw in 2018, 2017, where it was a little bit higher because we had that lack of supply. So the buyers found themselves having to compete. So we saw a similar number in terms of the sale price to list price ratio. This is an interesting ratio because it really gives you a sense of buyer confidence. If that number was 95%, clearly that means that the buyers are not confident enough and there aren't enough buyers in the market to come in and pay over asking. If it was 105%, when we get to Arlington, you'll see that we've seen those numbers in Arlington. That means that there are a lot of buyers in the market, but they're also confident in the market. They're willing to pay over the asking price because they have confidence in the town and in the housing market within the town. So you need two of those things. You need buyers, but you also need confident buyers to push that ratio higher.
And that's exactly, when you look at 2011 and 2012, what we were talking about before, how in 2013 buyer confidence increased dramatically. You can see that in the sale price to list price ratio. I mean, 2011, the average was 96%, 2012 was 97%, and from 2012 to 2013, it went up 3%. It increased dramatically, and showing that that's what was happening. The buyer confidence, we need to buy. The mortgage meltdown's over. Let's get in there and get buying.
Right. So, a lot of technical stuff there. What about prices? As everybody wants to know. So this is the average sale price in Lexington. It rose from 1.34 to 1.45. Big rise in the average sale price. Median went up as well, 1.2 to 1.35. There's a little bit more to these numbers though. Both the median, the average especially, but the median as well, are skewed if we see a change in the price distribution. So for example, if more expensive homes sell, that will drag up the average and the median. And that's what we saw in Lexington in 2020. We saw more, and we'll show you this in a moment, we saw more higher priced homes selling than we had historically seen. And what that did is it dragged up, if you like, pulled up the average and the median. So the 12%, I think it is for median, that 12% increase in the median sell price isn't real price appreciation. We look at some other ways of doing that, and we think price appreciation is around about approximately 5%. So you look at this graph and you look at the average, excuse me for going back, the average as well looks like a big increase, certainly higher than we've seen previously. Yes, there's some truth to that. About a 3% rise, 18-19, 5% rise as you kind of back out that skew because of the more expensive homes, 2019 to 2020.
And what I think is interesting is when you look at 2017 and 2018 with the average sale price, they're actually almost identical. And the median didn't change either for those years. If you look at 2017 to 2018, they were actually identical. So we had a couple of years where not much was happening from that perspective.
Certainly, almost no price appreciation. I mean, there was no shift in the distribution and almost flat, 1%, 2% price appreciation in that 2017, 2018, even with falling supply, which is kind of interesting. And that, gives you the precursor to why 19, many sellers thought, now's a good time to put my home on the market. I've not seen the price appreciation I anticipated, even with falling supply. Therefore, 19, with the perception of this downturn coming before COVID was around, that's why we saw a lot more listings coming on the market in 2019.
And we started seeing that in fall of 2018. Right. I know I had a few sellers who came on in fall of 2018 because the market's going to go to crap. We need to sell now. And they don't want to wait until next year. So this was the general sentiment that we were seeing around the place.
Right. Kind of interesting to compare 2019 and 2020 and what the effect of COVID was. And so in this graph, we've plotted the number of sales. And by sales here, we mean properties going under agreement. Because if you think about the home buying process, it's about from accepted offer to closing is about a 6-week process. So what I'm plotting here is not closing dates, but under agreement dates, just to remove that kind of 6-week lag or so from the data. But what's interesting, and if I can show you try and show with the cursor here, the pink line is 2019, and then the blue is 2020. This flattening of the curve for 2020 is COVID. Kicked in round about the second half of March, continued through April, and then early May, we began to see buyers coming back into the market, buyer confidence returning, and therefore homes beginning to sell. And that's what you see with this relatively, sharp changing gradient of this flat because of COVID. Now we're out of it, that confidence returning in the market, and then off the graph went. And by early July, I guess that's probably July, the number of home sales in 2019 was less than we had in 2020, and it just continued from there on. And you can see at the end of 2020, there's that big increase, 372 homes. that were listed in 2020 went under agreement in 2020. So if you look at the number of home sales, this is a different number, and that's why, versus 304 in 2019. So clearly very confident, a lot of confidence in the market, but also a lot of homes to buy. If you can be confident and want to move into a town, but if there are no homes to buy, then you can't, and therefore the sales would be flat, which is what we saw in many other towns. Okay, so a little bit of the details. Thinking about that price appreciation, one way we can calculate price appreciation is to look at the rate of change of average living area. That gives us a sense of how that's changing, and gives us a number around about 5%. A couple of other ways we look at it too, but that's kind of a sanity check for where that price appreciation is, and that's a metric that isn't skewed by more or less and more expensive homes coming on the market, which is what we saw. Interesting that the average list price to sell price, you can see under 750, it's actually quite depressed. Predominantly homes that are priced under 750 have something wrong with them. Poor location, poor home, poor condition, and so on. It is a low price point for Lexington, only 24 property sales too. In general, and we're talking generalities here, those homes have something wrong with them, which is why they're selling at such a low price.
Or they're quite small, and people are looking with families wanting to come in, and they're too small for them.
Right. Yeah. Once you get into that 750, up to 1.5 million, then that ratio raises to over 100%, 102, and then almost 102 for the 1 to 1.5 million. So the sweet spot, if you will, for the Lexington market is that 750 to 1.5. And you'll hear us talk in other seminars that, it's a very buoyant market below 1.5 million. And it kind of shows in the data here. Once you get over that 1.5 to 2 and 2.5 and 3 and so on, so that ratio begins to decline. There are more homes at that price point, but there aren't as many buyers. Clearly, there are more buyers who can afford a $1 million home than there are can afford a $3 million home. And it's just a consequence of that. There are just less buyers around, and that's why that ratio drops off as you get to the higher prices. So, also there is a new construction count. You can see that we've seen a shift in new construction. It's in the market review too. A lot of information about new construction, but you can see we've seen over the years a shift in new construction away from the 1 to 1.5 million, where we now only have 2 property sales, into that 1.5 to 2, and increasingly 2 to 2.5 and 2.5 to 3. So new construction has moved to those much higher price points as well, which is you can see here in the new construction data. Luxury. So we define luxury as $2 million and above. It's kind of an arbitrary number. We've used that number for the last, 3 to 5 years probably.
Yeah.
Since we've been doing the market review, we just picked an arbitrary number of 2 million and never changed it. So we picked $2 million for our so-called luxury market. Here's the luxury home sales. You would expect an increase just because of price appreciation. Homes will move into the above $2 million price point. So that rise that you see from 11 to 18, 17, 18, really you would expect to see just because of just ordinary price appreciation. But as you can see in 2019 and especially in 2020, a large number of homes. The blue is existing homes, and then the green color is new construction. So I separate those two out when we create this graph. But you can see a large increase in the number of home sales, over $2 million in both luxury and in both existing and new construction. And this is the reason why that average and the median got pulled up to those large numbers, or that large increase that we saw. It's because of the difference here between what we saw in 2019 and what you saw in 2020. And that's why it's kind of a false measure, or an inaccurate measure, perhaps the better way to describe it, in terms of price appreciation.
Because that's over $22 million homes increase.
Mm-hmm.
Yeah, that's
big
a
increase.
A lot.
Big increase. I forget the percentages. Yeah. It's all in here. I won't look it up, but it's all in there in terms of what that percentage is. But that's why you're seeing that large increase in the average sale price. It's not because of price appreciation. it's because of the number of more expensive
the sale
homes.
distribution charging.
Days on the market, it's lower than the market in general. The market in general is in the 40s. It's in the 60s, 70s for above 2 million. Again, no surprise there. Following on as you would anticipate, really, sale price to list price ratio less. It's on average almost 99.9, 99.7 in Lexington in general, but 102, 101.7 for those lower price points. Once you get over $2 million, it drops down to that 97. And talking about that price distribution, you can see that here. Here I've plotted 17, 18, 19, and 2020. You can see that shift in distribution as more homes come. First of all, more homes come above $2 million. Excuse me, but also more homes specifically in that 2.5 to $3 million. So that's important. So that's, to give you a sense of the luxury market. Here we just kind of show you again how that sale price to list price ratio and the number of properties are in each of those price bands. So that was single family. Then there was luxury. In here we also cover the new construction market in detail too. So if you're interested in what's going on with new construction, that is in there. And then first time we've done it, we normally cover the rental market. This year we thought it was more important to look at the condominium market because there's quite a lot going on with the condominium market. And there's a real bifurcation really between new construction or new development condominiums and existing condominiums. So if you're in a condominium today in Lexington, be it new or be it an existing one, Potter Pond and Pfeiffer Lane, I'd highly recommend you read what's going on in the condominium market. It's quite interesting. There's a lot happening there. There's a lot of detail in the market review. So if you're in a condominium, actually, if you're a buyer looking to move into a condominium, there's a lot of interesting things to be said about that market. And it really was only when we got the covers off the condominium market.
Opened it up.
We haven't looked at it in that much detail previously, but there was a lot going on, and you'll see a lot between the difference between new developments and existing. So that's in there too. So more in the market review than I could show you here this evening.
Okay. On to Arlington.
Okay, on to Arlington.
Okay. And again, this should be in mailboxes.
I'm going to guess it's going to be there this week. Arlington's really fast. Lexington has its moments. Sometimes it can be a little bit delayed, but Arlington is in general really quick. So
sorry,
I'm expecting tomorrow or the next day.
Right. So anyway, you'll see all of what we're talking about and a whole lot more. Actually, you'll see a whole lot more in the market review.
Right.
So,
single family, same story. Same graphs actually, but now if you can remember back to 8-10 slides ago, look at those inventory levels. But here's the key thing. This is the inventory graph again. In Lexington, if you remember, the big drop in inventory was in 2013. In Arlington, it was 12 months before that. The market in Arlington is very much driven by first-time home buyers and downsizers. First-time home buyers especially because they don't have a home to sell. And that's why in that 2013, the buyer confidence returned with the first-time home buyers. They're not worried about the home they have to sell, and so into the market they came. Once you start looking at the higher price points in Lexington, potentially they have to sell a house to be able to buy in the town. So that's why we saw a 12-month. First of all, a lot of confidence in Arlington, but also that's why we saw a 12-month before in Arlington versus in Lexington. Danny mentioned that we saw the downturn in the market in late 2018, and it's kind of writ large in this data here. It's that peak here. This is the fall market. If you listen to one of our seller seminar, we talk about seasonality. But that peak there, my cursor's gone away, that peak there, I'm not sure you can see it online. We need to figure out a better way to do this. That peak in late 18, that's buyer confidence. I'm thinking I'm going to wait a little bit. And that continued into 2019 and into 2020. And we have more to say about that peak you see in late 2020 in a minute.
We'll show you what that is.
Right. So home sales, remembering back to that sharp drop in Lexington with a peak in 2020, relatively static in Arlington.
And this is what most towns looks like.
True.
Fairly static sales.
You could almost pick a couple of towns a little bit further out in 2020 where buyers were looking to move that a little bit further out. I'm thinking about Acton, Westford, towns like that. We saw a slight increase in the number of home sales out there as buyers thought, you know what, I don't need to be relatively close in. I'm going to commute, maybe not at all, maybe 2 days a week, maybe 1 day a week. I can afford to be that little bit further out, buy more for your money.
Well, I mean, we had a home on the market this last weekend in, Acton, Saugus and Burlington. And in Acton, we had 24 offers on the home, 150 private showings of the home in the 4 days. So the Acton market is huge. But same with Saugus. We had, I think, 14 offers on the home. So it's and Burlington had 6 offers. So the market is pretty buoyant at the moment.
And you see a difference there, I think, in those numbers to some extent, in that Acton wouldn't necessarily have been that popular perhaps 12, 24 months ago, 2 years ago. Today it is, because buyers think I can be that little bit further out. Yeah. This turned out to be a stunning home on 2.7 acres.
Yep.
So there was plenty of land around it too. Although I'm not sure I want to plough that driveway, but that's another story. It looked great in summer and fall, but I'm not sure about the snow right now. But being that little bit further out, a bit more space, further away from your neighbours, and people being confident and actually wanting to do that. So anyway, we digress from Arlington. But Arlington's relatively static, as you can see here, right? As you say, then that's similar in many towns. So days on the market, remember we were talking in the 40s in Lexington. In Arlington, we're in the mid-20s. And realistically, it's hard to get below that kind of mid-20s. If you think about the logistics of buying a home, perhaps going through an inspection, getting to purchase and sale, which is when this days on the market stops accumulating. It's about 20 days. So this is about as low as it goes as a general number. I mean, absolute numbers can be lower, but 20 is about as low as it goes. So very, very confident, a market, very strong market, with a lot of buyer confidence in the town. Sell price to list price ratio, remembering Lexington just below 100. Here, even with that little bit of a downturn in 2019, somewhat in 2022, 2020, not 20, I've done really
2020
in 2020. Down to 102, but 102 is still much higher than other towns, but not as high as we saw in 16, 17 and 18 when the average was 104%. So on average, homes were selling for 4% more than their list price, and that's really all about buyer confidence. As I look at this metric as very much an insight into buyer confidence. How confident are the buyers in terms of both the number and confident in the market in terms of how it will play out moving forward. Because we don't get the large swings with home prices in terms of luxury homes, for example, in Arlington, there are very few above 1.5 million. The average is a closer representation of true price appreciation. And as you can see, it's been rising relatively slowly. We're at 947, probably in 2021, we'll get over $1 million. It's the average single family home price, which is interesting. Remember, at 1.5 in 1.48 in Lexington. So that number is rising, and it's a steady rise that we've seen in average sale price. And so this is a better representation of true price appreciation, upwards of 3 to 5% or so we've seen over the last few years. And you can see the same thing in the median sale price too. In terms of the cumulative sales, remember we ended up at about the same place as we were in 2019, as you can see it here. Again, that flattening of the curve, or the gradient flattening here, that's COVID kicking in. It came out of it at the early part of March. Then it rose.
Early part of May.
May, excuse me. But it took all the way till the end of the year before we caught up with the sales that we got in 2019. So we're kind of, there or thereabouts, matching it, going up.
Different to Lexington. Very different
from Lexington in terms of that, yeah. Having said that, I mean, we need to be cautious that we don't, that it wasn't that Lexington was really good and Arlington's okay. Just Lexington was to some extent an anomaly. If you look at all the other towns, if you think about the turmoil of 2020, COVID, the thought of a pandemic, and everything that went along with that, the housing market was essentially the same as 19, which is very is a strong picture for the town. What we were predicting to some extent as we were in March, perhaps into early April, when's it going to come back? Is it going to be May? Is it going to be June, July? What's the year going to look like? We didn't really know, but it was pretty clear by that early May timeframe that we were going to have as good a year, if that's where we'd put it, as strong a real estate market in 2020 as we saw in 2019.
Or minimal impact.
Almost none at all, apart from that's kind of slowing down or flattening of the curve just in that period between March and May.
And this is for single-family homes.
Correct, single-family homes.
We need to stress this. This is
just for single families. We're going to talk about condos in a minute because there's a different story there. Here's the data that we showed you for Arlington too. You can see that new construction, not as much new construction as we see within Lexington, for example, but a little bit of new construction. It's a tough town for the builders for some technical reasons to actually build new construction. That's all in the market review, that one over there, this is Lexington. So there's a lot of detail there when we talk about new construction about why we do not see as many new construction homes in Arlington than we do in Lexington, for example. All right, condominiums. Different story in condominiums. There's a little bit more color to this story. The last story was it was good. It was good. It was a strong market. It was basically the same as 19, which was something of a surprise given the turmoil in the market. Condominiums. If we look at home sales, condo sales, it's always a little bit up and down. It's never flat like the single family market. There's always a little bit of
variability.
In it. But overall, about the same number of homes has condominiums sold as we had seen in previous years. So about the same picture. Devil's in the detail there, though. Average sale price, again, not got that skew because of higher priced homes. So this is a better representation of true price appreciation. And as you can see, it's been a relatively steady rise, really since 2016, 17, 18, and carried on. So it was overall, we did see a steady rise in the number in the average sale price. Same is true of the median too, moving up. What's interesting though, given that, if I go back, if I may, median prices are rising. Okay, looks like it's a confident market. But when we look now at sale price to list price ratio, whoa, okay, we're 105 in 17 and 18. Now we're down 102 in 19. Okay, not really a surprise given what we talked about with this perception of a housing downturn. But even lower in 2020, like kind of what's going on there? Because average prices rose, quite markedly, about 5% recollection in that market. So kind of what's going on with that sale price to list price ratio being as low as it is, given how buoyant the market looks to be.
And we'll get into that right now.
Okay, go for it.
No, I'm just saying, another couple of slides.
What, another couple of slides?
Yeah, 2 slides. Yeah.
So, maybe we should jump forward here. Here's the sale price to list price ratio. That's days on the market, median sale price, list price. This is the one I wanted to look at.
Okay, and then you go back to those others.
No, because you can talk it all here. If you remember to the other graphs, when we showed you the cumulative sales, there was a flattening of the curve March through May. We don't see that here. We almost don't see that at all. What we saw, though, and here's the real challenge, by about July, we had got to parity with 2019. Once we got to the July, we saw a lot more homes, a lot more condominiums coming on the market. And that's the challenge that we faced and why some of those ratios are as low as they are. And it's because a bolus, if you like, a group of condominiums came on the market in that fall market, saturated the market to some extent. Now, at the end of the day, they all sold, and the majority sold, but they all came on at the same time. And as we were listening to what buyers were saying, it was, I'm not as comfortable living in a condominium as I am in a single family. Shared space, I don't necessarily feel as comfortable given COVID, given what's going on, living in a shared space versus a single family home. And so we were getting that sense from people, even though remember the prices are lower than for single family. Average somewhere in the sixes for condominiums, almost $1 million for single families. Big price difference. There was that reluctance to move into a condominium. And add on to that, an awful lot of condominiums came on the market in that fall market. And it saturated the market.
It did. Even to the point that we had a period of time in that fall market where we were bringing condos on the market weekly. And we were seeing a definite change week to week to week, even to the point that I had a large number of agents calling me to say, are you seeing what's happening in the market? Do you know what's going on? And we were sort of talking it through, but it was profound. It was quite a dramatic change to what we normally see in Arlington, that I had competing agents calling me to say, do you know what's going on? And we were giving the answers.
Now, it played out in the end. So by the time we got to the end of the year, guess what? Those condominiums sold. Yeah. And there's two competing factors here. The first one is I'm not feeling as comfortable with that shared space on the one hand, but on the other hand, I can't really afford a single family home. So guess what? I do want to be into a home as perhaps a stepping stone to the next, my next home, which might be a single family, or would almost inevitably be a single family. So you've got those kind of two competing things of shared space, somewhat reluctant to move into it. On the other hand, a more affordable home. And in the end, the more affordable home won out. And those condominiums all sold. And you can see here, by the time we got to the end of 2020, 240 in 2020, 240 condos had gone under agreement, whereas in 2019 that number was just over 203. So that's kind of how that played out. But it was definitely in that fall market, a lot came on the market, and that kind of saturated the market. And that's the reason why you see that sale price to list price ratio somewhat depressed. Yeah. It's because of what happened in that fall market.
Short period of time.
Right. It kind of dragged everything down, if you like. So a little bit of a skew. We would have expected a number to be consistent with what we saw in 2019. Sale price by range. You can see it's the average living area and so on. So the same as we've seen before. Yeah. So. What's going on in the market in general? What's the kind of big picture, if you like, in terms of what's driving the market and what impediments are there to, laying the foundation now for what's going to happen in 2021? A couple of areas that are worth kind of pointing out. You may have seen this before. You've listened to our masterclasses before. Really, who are today's buyers? This is a demographic curve for the United States, done I think in 2015. We'll get an updated one, I guess, this year sometime. What this shows you is how many people are in which age bracket. And you can see two bumps, if you will, two areas where you've got lots of people in those specific age brackets.
Males and females.
Yeah, blues and reds, if you like. The top one there, the top yellow bar, is the
downsizers.
Thank you. The downsizers, the baby boomers. That's what I was looking for. The baby boomers, me basically. So those were the children that were born just after World War II. That's interesting, but what's even more interesting is they're now reaching retirement age. And so what's happening there, and why this is also not only the baby boomers but also the downsizers, they're now looking to move out of the home that they're currently in into a smaller home, therefore more affordable home.
And they want to stay relatively close to where they live now because, that's where their friends are. That's where they know all the restaurants are, all of this sort of stuff. So this is why when you've got towns like Lexington and Winchester and Belmont and Newton, where you've got a lot of larger homes, and when those folks are wanting to downsize, they want smaller homes. And there's homes in those towns that are smaller, but Arlington and Medford and your Woburns and your Burlingtons, your Walthams, they're in demand because you've got both of those demographics. You've got your baby boomers and you've got your millennials, who are the younger ones in that thing, all wanting the same sort of home.
Right, so the lower yellow bar there are the millennials, first-time home buyers. And if you think about the characteristics of the home that the downsizers and the millennials are looking for, they're almost identical. They're looking for relatively affordable, quite like a good school system, because the downsizers are looking at price appreciation. The first-time home buyers eventually will be looking for a school system in general. Also relatively close to downtown to Boston, if not to work, certainly for leisure. And now when you kind of lay that on top of Arlington, for example, not just Arlington, but lay it on top of Arlington, it kind of ticks all the boxes. Good school system, vibrant town too, it's a great community, close to Boston, good schools, it's kind of all there, and relatively affordable homes in comparison to, as Danny said, Winchester, Belmont and Lexington, for example. And so Arlington found itself for this really at the sweet spot, both groups, if you like, downsizers and millennials wanting to move into that town. And that's why that sell price to list price ratio, a measure of buyer confidence, is at 104% in Arlington. In other towns, it's rare to get to that number. So that's kind of the demographics that are playing out and will continue to play out over the next, 5+ years or so, until that kind of bolus begins to disappear and we get back to somewhat normal. Excuse me. The other one that people worry about, think about, perhaps a better way to put it, would be the mortgage rates. What's happening with mortgage rates? And this graph is interesting. When I put it together, it surprised me, which is why I put it in the presentation, is that in that 2018, where we thought, interest rates are
starting to go up,
but look at them compared to where they are today. Back in 2018, where we were giving masterclasses, we were saying things like 4.5% is not really a problem. The pundits are saying, the analysts are saying that it's only really until interest rates, it will be when interest rates get to 5.5%, 6.5%, that it will have a negative impact on the housing market. Those days are long gone, clearly, and now here we are at 3%. The biggest challenge that we face with 3%, first of all, is there enough inventory? But also, the banks, we saw this last year, getting swamped by not only home buyers, but home refis as well. And so the banks found themselves in a situation where they, with everybody working from home and working that process out, they just found that they couldn't quite cope with the fact that so many people either needed to buy or they needed to refi. And that was some of the issues that we saw in 2020. But the reason I put this in is that, at least as far as the analysts can see, and they've not necessarily been very accurate with interest rates, but I think this is probably pretty accurate. They're going to stay relatively low for the rest of 2020 and probably beyond 2021, until such times as we begin to see, vaccinations and that out of the way, but also the more vibrance coming back to the economy, and that really is not going to be late 21, probably into 2022 before we see that coming back in, and therefore rates will remain at those relatively low numbers we anticipate.
Predictions.
Okay, brave. Here we are on the 10th. So, I mean,
he doesn't like me interrupting.
No, you can. Would you like to give the predictions? Because I was like,
Well, the predictions. I mean, I think we're going to have a very similar year. This is my opinion.
Okay.
Let's see if he
see if it matches me. Go for it.
I think 2021 is going to be very similar to what we saw in 2020. There's going to be a huge amount of buyer demand, buyers wanting to, really, what is our new normal going to look like? Our new normal, I think, is going to be where a lot of folks can still work from home. Our sons and his fiance are currently living with us. Because they've moved back over from LA, their company lets them work from home, and he's now looking to buy or rent a home when the market sort of starts again. But I think everything's changing. We all know this, everything's changing. But the demand for housing and bigger houses in many instances where you've got 2 adults potentially working from home at the same time, and you've got children who are doing some sort of hybrid model of remote learning, they need bigger houses. And I think we're going to have a very buoyant market again in 2021, especially from what we've seen in the homes that we've brought on the market this year so far. I think it's going to continue this way. What would you like to say, Mr. Collins?
I would say, if you think about it from a seller's perspective, thinking about Arlington, first of all, as we just talked about Arlington, I don't see a large increase in the number of sellers coming on the market in 2020.
No, I think there'll be the same amount.
The same amount, because they didn't in 2020, so why would they in 2021? It's hard for somebody in the Arlington market to downsize, because where they're downsizing to is a very competitive environment. So in the majority of towns, we're going to see the same number of sellers that we saw in 2020 in 2021. Lexington is an interesting one, given that we saw so much come on the market in 2020. Will we see those same high levels in 2021? I'm not sure we will. There's still the issues with downsizers being able to buy that next home. They have more ability as they move out of Lexington, where the average sale price is 1.7. So they have the financial ability to compete with the first-time home buyers. The question is, will they? So I'm not sure we will see as many listings in 2021 that we saw in 2020, because I think 2020 was a little bit of an anomaly. I think we'll see more than we've seen historically in that 17, 18, 19, but perhaps not at the same levels we saw in 2020. So that's kind of the seller side, the supply side. Thinking about the buyers, the demand side, there are a lot of buyers in the market for all the reasons that Danny explained, that they don't necessarily want to be, where they are right now in central Boston, for example, or Somerville. They'd like a little bit more space. I'm not so comfortable with shared environments. Why don't I, move further out? So the number of buyers in the market will be perhaps not at 2020 levels, but certainly they'll be more than we've seen previously. And that's certainly our experience this year. So relatively static supply in the majority of towns, increased buyer demand, or at least same buyer demand that we saw in 2020.
Which is high.
Right, and therefore we can expect positive price appreciation in almost all towns, I think it's fair to say.
Yep. So that was pretty well agreeing with me.
Yes, okay.
Let's talk. You see, I like that I got in first.
You've heard it from me before.
No, but that's what I talk to. So what are our stats? Do we know what we're talking about? Okay, so...
Hopefully they've
given
this that there is some...
Last year, we listed and sold 65 homes, and we helped 49 buyers buy homes. So that's a good number. I can't add that up at the moment. Our sale price to list price ratio is 103%. So that's a combination of a whole lot of factors, but it's what we do from prepping a home to staging a home to all of the marketing that we do, because we do a huge amount of marketing of a home, and working with the sellers to get them the highest price and explaining the market to a seller as well. So even though you're talking about Arlington having an average sale price to list price ratio of 101 last year, and you're talking Lexington at 99.7, we did 103%. So it makes a difference. Our average days on the market were 28, and we don't want to toot our own horn too much more than that, but we think our client deserves to be the smartest person at the closing table. And, we all benefit by becoming smarter about home buying and selling, which is why we do these. And we'll be doing them monthly now as well. And look, we'd love to have you join, ask questions, all this sort of stuff. We stream to YouTube, Twitch, and Facebook. And, look, come join us next month and ask us questions. We'd love to have some questions too while we're doing this.
And if you have any questions about what you see in this or that, please reach out to us. There's a lot of detail in there, a lot of nuance in terms of what's in the analysis of what's happening in the market. So lots of information. Please read it. If you're interested in buying, selling, or just interested in real estate in general. And if you have any questions, please feel to reach out to us.
Yeah. So thank you and have a great month.
All right. Until then, bye.